Hi, this is Jeffrey Cohen, Chicago Quantum. How are you? So, going to give a quick market and business update. This is targeted to investors, traders, people who care about quantum computing. Scientific community might find it fun and interesting to listen. Lightweight traders, people that just hold large investments, probably get some insight. And so, this is meant to also be a little bit entertaining. So, I'm going to start by talking about some stuff, right? What do we want to talk about? Well, I'm just going to walk through some random stuff here and help you out. So the first is, if you follow our show, you know I like FinViz. And FinViz does a bubble market analysis. So the way you read this chart, I find it fascinating, is the stocks on the bottom are the ones that have fallen. Dollar Tree yesterday, this is from yesterday, fell 12%. They had earnings. By the way, watching this made me listen to their earnings call. All of this is based on the cost of shipping. Okay, interesting. Etsy and NetApp are up. Autodesk is down. But Dollar Tree, and by the way, it continues to fall today. So I love Dollar Tree. I shop there. I couldn't believe when I saw that it fell this much. And so, hey, learn something. So bubble chart, FinViz, worth looking at. The other thing I want to show you, so this week I've been studying a lot for a certain type of for exam. So every once in a while I get really bored because I got to tell you, studying to be an investment advisor when you're already an investment advisor, it's just a lot of stuff you know, but a lot of terms that maybe you don't. So I don't know if you know, but we follow three stocks: Satsuma, QRTEA, and Corbis. And so Satsuma does research and is a phase 3 clinical trial candidate to treat migraine headaches with a nasal container. So basically, you get a migraine and immediately you take this drug, and within 2 hours, that's the target, you feel better. Free of pain, free of really big, inconvenience, and no side effects. And so, I've been doing a ton of due diligence on Satsuma. Well, here's the thing I didn't realize. If you were to go to Costco with the free coupon, it's $85.60 for a tiny little ampule. At Osco, $87.60. At Mariano's Pharmacy, which is just up the road here, over $100. By the way, it's $725 retail. So I got to tell you, if Satsuma gets it right, and their current phase 3 trial where they have a new bottle and a new formulation, it ends, I think it's October of next year. If they get FDA approval, this is going to be a very profitable drug. So for Satsuma, I don't know if they're going to be successful, but I know the market opportunity is huge because I just found this today. And this is actually the existing drug that does it, that has a lot of side effects and maybe doesn't work that well. And so, very excited. So it's good to do your due diligence because you don't really know a lot about these companies that you might be investing in. Most people don't. So this is what an options looks like using Vanguard. So we trade with Vanguard. By the way, I love Vanguard. No fees, no commissions on stock equity trades. It's just great. So what happens is QRTEA, and this is earlier in the week. This is on the 23rd. It's 4 days ago. Stock was trading at 265. And so what I like to do is get a view. So if I looked at the options that were expiring in September, this is a $3 option. So the stock would have to go up 35 cents or about 15% for this thing to even be in the money. And then it's 15 cents to buy it. So it's got to be a 315 by September 17. Not a lot of odds for that, 15 cents. But you keep going through. So now if you wanted to look at a stock that maybe by October would go up, the 250, which has an intrinsic value of 15 cents, trades at 45. So it's worth 30 cents, the time value. At $3, 30 cents. At 350, 15 cents. So if you wanted to invest in Akebia and you wanted to kind of juice up your trades and add leverage, and you really believe this thing could go to 350, you might ladder in some 350 options. Now, the ones for October, right, pretty darn risky. You don't have a lot of time, but they only cost you 15 cents a share. You don't have to pay the 265. Now, you want to go further out, and you want to go January 350 options. Those are 45 cents. So now I'm buying plenty of time. So let's be honest, this stock was 350 not that long ago. You're making a bet that it just goes back up. 45 cents a share. Now, what'll happen is there's people out shorting the stock, shorting it from $4, right? So what they probably did when they shorted it at $4 is that maybe they bought a call. And so you shorted it at 4, you buy a call for 4, and so now the call protects you on the way up, and your short makes a profit if it goes down. So you're almost guaranteed of not really losing a lot of money on a short if you can buy an option and it's not that expensive. So I've been spending a lot of time the last couple of weeks looking at options pricing and trying to decide what to do. And in fact, this week we made our first real options investment on one of our existing holdings, and I'm going to talk to you about it in a few minutes. Switching gears a little bit, how'd the market do this week? So the market's not over, right? It's been a big day today. But this is the weekly view of the market from like 20 minutes ago. Okay, so if you look at what the market did this week, real estate's down. Consumer defensives were down, I think in part because of COVID, right? The number of cases went up. It's pretty dramatic. Okay, telecom services dropped. I'm always curious about that. Healthcare. So pharma companies did really badly. And in fact, biotech, although biotech is up today and it drove the market up today, biotech has been down for the week. And it's been tricky. But it's just interesting when you have your healthcare providers, healthcare insurance companies are down. You have your drug companies are down. Why would we be fully invested in pharma? It's crazy, right? We're basically making a bet in a market that's down. Well, when are you going to make money? If you were to say, oh, I'm going to buy the best stock, I'm going to buy Google or Amazon, what's already up? It could still go up more, right? But look at Amazon is worth more than like all your consumer defensives, all your consumer retail, and half the household personal goods, half your beverages. If you want to buy Google, instead you could buy the entire healthcare industry, at least pharma industry. So, you gotta make your choices, right? And so if you believe that healthcare is going to do well, you buy when it's low. I'm always focused on the banks as well. So earlier this week, the banks were blood red. Now it's the end of the week. Banks look great again. So banks have been pretty volatile. It's just so interesting. I think that's to do also with interest rates, what's going on with Jackson Hole. So I'm showing you this, and then utilities are down because interest rates have been going up. It's fascinating. Interest rates were running around 1.24 for the 10-year yield, U.S. government notes, Treasury notes. I think it's up to 135, 1.35. So rates go up, utilities go down. You didn't hear from me first, but you hear from me every day. Railroads are down. Integrated freight is down. So Dollar Tree dropped like a rock. Why did Dollar Tree drop? Well, the reason Dollar Tree dropped, they said it was because the cost of global shipping went up and the reliability went down and the time it takes went up. They're still having effects of the Suez Canal issue, and the costs are through the roof. And so, of course, Dollar Tree sources many of its goods overseas. And so now it's much more expensive to bring them in, so they're having to make changes. So I want you to think about that. Global economy requires shipping, requires transport. We're seeing less of it. Just a thought. And so I think with COVID going up and with shipping becoming more expensive, I think you're going to see a lot of issues on the consumer side in the short term. What else can I talk to you about? I'm going to talk to you about the debt. U.S. federal debt. Just want to talk for a minute. So we're hitting a debt ceiling. So what does that mean, Jeff? I don't understand. How could there be a debt ceiling? Well, there is.
It's 12 hours.
From a legislative point of view, there's a maximum that you're allowed to borrow. Okay. I don't know what the number is, but we're getting close. By October, November, we'll be hitting it. Boom. Means you can't borrow anymore, right? So our total public debt is $28.132 trillion. If you look in 2020, you see this thing's gone up a lot, from 24 to 28 trillion dollars. We borrowed $4 trillion in the past year. Now I got to tell you, if I borrowed $4 million, right, I'd be probably thrown in jail because I can't pay that back. But we borrowed $4 trillion, and the point is that curve is starting to bend at the very edge there. And so, because you can't keep borrowing. And so the question is, how are they going to handle this? And so I've got a few ideas. I think this is affecting what the Federal Reserve Bank is going to do with money. It's affecting the overall just flow of money and the fact that we still have over $1 trillion of excess reserves, of excess deposits sloshing around the largest banks. So one thought would be, if you have all this public debt and there's all this cash in the system, well, the worst thing you want to do is pay it off. Because now what happens is you're putting more money into the system in return for debt. But, you could start to taper, you could start to sell less debt into the market, and you can try to kind of work out some of your debt. I think this is going to happen. I think we don't need to owe 28 trillion. There might be ways to start to pay that back, pay down some of our debt, while at the same time moving some money around, right? Moving some assets. So I think this is going to pose an interesting opportunity for us as a nation. And my guess is you could start to see us pay down some of this debt, which, on a personal note, I think is terrific. So now I'm going to get back to what I thought I was going to be talking about. What are the key topics that affect our firm and what we're doing this week? So in other words, what's up, Doc? Well, the first is we're making progress on our client work. So I didn't know you made client work, Jeff. I thought you guys were just like on social media, talking a good game, maybe buying a few stocks. No, we are. So right now we have 2 paying clients. And the one that's so interesting is our media and entertainment client. And we continue to make progress. And so using the D-Wave quantum computer to solve for how to make basically like video games and virtual reality environments more interesting, and to provide creative and innovative song lyrics and songs to the player or to the listener using a quantum computer. See, we could do it today with pseudo random generators, and we can solve for things like, what's the best, hey Jeff, what's the best music I should be listening to? Well, tell me about yourself. Well, I got these 7 attributes. Well, if I solve that, which I can, remember I got the Dell computer here, right? It's a little bit further away now. I can't tap it. But yeah, I can tell you exactly what you should listen to. But that's not interesting. What's interesting, what does a quantum computer say you should listen to? That's what we're doing. What should I see? What should I be listening to? Let's use a quantum computer. So that's going really well. I'm so excited. I'm hoping the client could publish a paper. We can work with them, and you can really see for yourselves what we're doing there. Real quantum computing. It's nice. Number 2, Studying for the Series 65. The exam is next Friday. I am scared to death. 120 graded questions, 130 grade total questions in 180 minutes. Woo! Got to wake up early, get a good breakfast, get downtown. Sure hope we do well. Once we pass, we'll start to focus in earnest on our investment advisor registration database, data entry, and then over time pay some fees. We will be registered federally and with the state of Illinois potentially, or just state of Illinois, investment advisor. That's with FINRA. It's great. I'm so excited actually. So the bad part is you're going to have to see some changes, right? Once we are a registered investment advisor, it kind of changes the game for us a little bit. So I'm going to talk a little bit about that on the fourth bullet point. But we are actively studying, we are actively learning and finding new materials and really just becoming better, sharpening the axe. What Trey Davis taught me at IBM a long time ago. Sharpen the axe. That's what we're doing. That new certification and registration is going to change the game for us. We are running our Chicago Quantum Net Score analysis. On Monday, we shared what the analysis told us about the American Stock Exchange. We've been running it for other things. We got a couple areas of continued development. One of them is got some new ideas on how to feed that to the quantum computer, which is cool. The second is there's a data issue out there. August 2nd of 2021, August 2nd, bad data. Maybe the market data services staff that we employ went on vacation or something or had a bad day, but right now we've got problems on that day and it's affecting our analysis. And so some of it's been corrected, some of it not. Getting a little frustrated. Other areas for development are around kurtosis and what kurtosis is, it's the amount of area of a normal distribution that's not normal. So it's fat-tailed or thin-tailed kurtosis. So what that does is it affects the options pricing. And we've been looking at options. It'd be great to know what stocks have the ability to really explosively move or do not explosively move and how that affects options pricing. And then there's some stuff that one of our clients told us about that we still think about. I'm sorry, it's a bit slow to get done. Then social media presence, a new advertising campaign. So we make these YouTube videos. About 25 people a week watch them. It's great. You take a look. We've got Medium articles where we publish our findings, publish our research and our recommendations, which we have to do, right? You got to publish your recommendations, put them out there. Very few people are reading them. In fact, the most popular article that we have on Medium, we wrote in like 2019. It was the top quantum computing vendors out there. And we have done a ton of research for our paying clients, but we have not updated that article. And that article is still the best article we have. And so what we're doing, we're spending a little bit of money right now on Google. We're getting more people to see our videos. We're trying to get more people to see our website. I think that's great. Now here's what's going to happen though. Once we are a registered investment advisor, we have to provide a copy of our website to the Securities and Exchange Commission or FINRA. And that means you're going to see a lot less excitement on our website. It's going to be a lot more dry. And then what's going to happen is a lot of that content that you've been used to seeing is going to be behind a paywall. Then we're going to be charging for that. And we're not going to make a lot of money at it. But the reason is that we're not allowed to put all this content out there as an investment advisor. As an example, we have to take down our client testimonials. Not allowed to have them. I can't tell you how much money somebody made listening to our recommendations. That's just not what you do. So again, as we become a registered investment advisor, we become a lot more boring. We become a lot more like all the other investment advisors. You're not going to see a ton of our free social media. It's going to, again, be behind a paywall. And so hopefully you enjoy some of our stuff that we do, because we have a heck of a lot of fun. So I'm going to show you something now it's going to be, I just want to show you because I find it amazingly funny. So We're very active right now on StockTwits. By the way, I promise I'm going to talk to you about a martingale. Just not yet. Those gamblers out there probably know about it, and others. So this is StockTwits. These are some of the stocks we follow. You see that we're always looking. Now we're starting to track Dollar Tree, and so QRTEA is great. So what happens is there's a whole bunch of like quote unquote friends out there, right? I'm gonna follow this guy. So one of the things about the QRTEA StockTwits site is that there's not a lot of good content, but there's a lot of enthusiasm. And so this is our Spirit Drummer series for QRTEA. So Spirit Drummers, right? I love it. Autopilot. What movie should I watch? There's this kind of stuff. Donnie Donowitz, by the way, how you doing? And there's Vince Vinegar. There's a lot of people out there. These are probably people that are investment advisors. They're pretty smart when they post something intelligent. But in general, this is just goofball stuff, right? You get some unusual options flow, but look at that. Loving it, right? Boom. Printing, right? Rocket Man. I love that. That's actually from Mad Max out of Australia. Just great. More drummers. Drummers. And so I love it. This guy's great. This is Vic Vinegar. He's a nice guy. Donnie Donowitz again. Oh, by the way, biotechnology was a bear on QRTEA at $4. He's a bull on QRTEA at $2.50. I guess $1.50 makes a difference. And so you have people coming out of the woodwork posting these Spirit Drummer videos. So we did. I love it. We're rock and rollers. So more video, more Spirit Drummers, right? And so it all started with Donnie, Spiritual Awakening Drumming. I love it. Spiritual Spirit Drumming. And so I'm going to leave you with a thought. If you want very serious analysis on stocks, you've got to do the due diligence yourself. You got to read the SEC filings. Please do it. Read every 10Q. Get out there and find out what they're filing. Find out what's going on in the market. Really know what you own and do your due diligence, right? On the other hand, though, it is fun to see what people are saying. And so we have another stock that we're invested in, which is Corbis. And Corbis, I have never seen such a quiet board. Reese's Puffs. Damn, this board is really quiet. So we post things that are, we think, pretty high IQ. 2 great articles, right, for non-scientists. Market maker and supplemental liquidity providers who are out there in the market helping to make a market for Corbis. So I actually thanked Goldman Sachs for the work that they were doing. Now you might say, Jeff, who cares? Well, I think you should care, because if you're in the market and you're in Corbis and you start to understand that, we're trading like a couple of hundred, couple of thousand shares at $1 a piece, and then there's Goldman Sachs with 10,000 share orders in, 7 cents below, 8 cents below, 9 cents below, 7 cents above, 8 cents above, 9 cents above. It's good to know that, right? So you know basically where the walls are. And then there's a guy that's really negative. All the time, right? Charles Escobar. I think that was a Colombian crime lord, right? So I called him out, and I'm sorry, because you really shouldn't do this. This is all meant in good fun. I'll make you a deal. In the next hour, sell me 1,000 calls at attractive prices. You do that, and I'll buy them. Well, guess what? The guy hasn't posted since. I'm so sorry, actually. I don't mean to be mean. But I followed the options. Do you know what? Everyone raised the price of the calls. I didn't get to buy a single call. By the end of the day, I bought some more calls. But so no one is really bearish or bullish, I think, that says. Now we are, because we have to be. We're moving to be an investment advisor. 10B51, we're not going to be fraudulent. And so we're out there, we're driving the market with knowledge that we see, right? But this guy like just pumps all the time. It's awful. It's awful. Tell me how much money you've lost on here first. And so that post really had me thinking. So this is the other reason to be active on the chat rooms about the stocks that you're invested in. Because that post really made me think. And so I want to show you what I did. So I went in. First off, I said offer withdrawn because I couldn't buy anything. But then I actually posted a picture from my stock account. I answered his question, how much are you down? I'm down $6,051 drawdown on a cost basis of 28.3. It's a pretty big drop. That's like 25%. But you notice the options are going up. The stock is going down. Okay. So what happens is we started off in our position on Corbis very small. A couple of thousand shares, $4,000, $5,000, nothing. But as the stock keeps dropping, we keep doing more and more due diligence. We keep liking what we're seeing. It doesn't mean that other people like what we're seeing, but we like it, right? And so we buy more. We double down. We double down. We double down. We double down. We buy more. We buy more. We buy more. We buy more. That's a martingale. A martingale is based on the premise that you can't lose forever. At some point, the stock's going to bounce. If you're playing blackjack, you can't lose a coin toss 1,000 times in a row. It's just not likely. So what you do is you double your bet every time. You lose a coin toss, you double your bet. Coin toss again. You lose your coin toss, you double down. Coin toss again. Statistically speaking, you're either going to be bankrupt or the coin toss is going to go your way. You're going to break even, you're going to walk away. I don't know. Unless the coin is jacked or not fair. It's possible that the stock market is not fair, which is fine. So we were down $6,051. So my loss is now down $5,600. So what's happening is as we buy in and the stock goes back up, we're making money on the newest shares that we bought. We're losing money on the oldest shares that we bought, and we're going to somewhere meet in the middle. But as the stock starts to rise again, we'll have so much more momentum in the stock. So call it a martingale. And we are doing this with Corbis right now. So he made me think. And the first question I had was, well, Jeff, what's your break even? So I'm going to show you a spreadsheet, actual numbers of our holdings on these three stocks and what it means. And what it means, right? So let's blow it up a bit. Everyone likes to see a little better here. All right, let's go 150, 200. Let's go 200%. 150%. So I'll show you the format. So these are the number of shares. Here's the cost per share, break even, without any fancy business. So let's take a look at the break even without any fancy business. So Satsuma, break even 522. QRTEA, just from a stock perspective, break even 310. Corbis, break even $1.59. Oh, actually it's a little bit lower, $1.55. Okay. So what did we do? Well, we bought some options. So on QRTEA, we bought some January 2022 calls at $3. Not a lot. 3% of our investment. Juice it up. Break even on those is 352. So now our break even on QRTEA is 317. And we've got to hit that break even by January of 2022. So again, Satsuma is 522. We might make it. We might make it today. We might make it next week. I'm so not worried about Satsuma. It's great. But for QRTEA, You got to hit 317 by January of 2022. We're going to hit that. This thing just goes up and down enough that you're going to do it. And any good news about their stock, about their drug. By the way, in March is the latest that the FDA gets to either approve or deny vadadustat. And so that, if it's approved, big money. Big money. Woo! If not approved, we're in big trouble. So big trouble or big money? I'm okay with that. Now let's look at Corbis. So what happened with Corbis? So what happened was we have 19,500 shares. It's not bad. Not bad. At an average price of $1.55. But we bought some options. We bought options worth 23,000 shares that expire in September. We didn't pay much. We really didn't. $1,000, right? So what happens now is the break even for September 17, it dropped a penny. So now we break even at $1.54. Now what happens at $1.54 is for every penny that goes up before September 17 above our break even, we make that penny 40,000 times. If it goes up $1, we make that 40,000 times. I like that. I like it a lot because I've done even more due diligence yesterday and today. I'm going to show you an article on Corbis. I can finally understand like a normal person what they're trying to do, not scientific. So now let's look at October. All right, so the Septembers expire. They're gone. Lost your $1,000. Sorry, Jeffrey. So just October, if we don't look at the sunk cost. So we bought 42 calls, which is 4,200 shares. Paid like $300. So now the break even in October is $1.58. If I hit $1.58 by third week in October, we're making money. If I want to price in the cost of the options, assuming that I just lost all my money on the Septembers, it's $1.59. So it cost me a penny. I don't really care. It's not a lot of money. I also bought some January calls. So now what happens with the January calls is I had to pay more, a lot more. Bought 6 call options, 600 shares, paid over $100. Now my break even by January of next year is $1.70. So I'm feeling pretty good. The stock's probably going to hit $1.70. My break even with the options is $1.62. And so really now I've got to hit it by, it's $1.62. So with my options, my break even is by September 17, because I'm assuming I'm making money. So those were just with the options, assuming that all the other ones went away. Right here. So now I'm assuming that my later dated options are going to be worth more if the stock goes up. Stock hits $1.52, I'm in the pink by September 17. By October, if the stock goes up, it's $1.59. My break even in January is $1.62. I'm feeling good that Corbis is going to be $1.62 by January. I feel good that my overall investment is safe. On QRTEA, same thing. Do I feel like it's going to hit 317 by January? Sure I do. In Satsuma, 522. So what happens is by adding to your investments, by buying the dips, by buying when it's low and doing your due diligence, I now have a very good understanding of what my break even is. Now my maximum gain on all of these is infinite. If we pull a Sava, it's going through the roof. I looked at Sava today. Do you know that stock was $3 this year? It hit It hit 147. From $3 to 147. I think it's at 70 right now. That's a lot of money. And then to talk about how much does it have to gain based on what it was when we started prepping for the video, it's got to go up 32 cents, 42 cents, 27 cents. It's probably going to do that. Maximum loss, though, is pretty high. We have no hedge on the downside. We just lose. Got 60 grand in Satsuma, 35 grand in QRTEA, 31.5 in Corbis. for us, this is a pretty significant investment, right? This is an investment based on a lot of research and a lot of due diligence, and also a little bit of a bet on the market. And so, fingers are crossed. We're being fully transparent with our holdings. And so there's no funny business. We're not trying to pump a stock. We're really in. So the markets are in summer doldrums. They really are. And one of the things I just wanted to show you as well, this was a chart that I produced earlier this week. I was doing some homework on pharma. This was on the 28th, so this was yesterday. This was Thursday. These are drug manufacturers. Remember, the larger the box, the more they're worth. There's some very, very light green here. And biotech, for the most part, is mostly red. There's a couple of greens. It's mixed in. But you have to have really good news to have made money in biotech this week. Now, today's Friday, looking a little better. But again, biotech is not a popular place to be right now. So if you're investing in biotech, you have to have very, very strong stomach. I want to do a hats off to Axe Cooper. I discovered Axe Cooper. By the way, Axe Cooper doesn't know me and doesn't know that I'm talking about him. But Axe Cooper provides price targets for stocks based on options investor sentiment. And what it is, it's an algorithm that every day analyzes the option positions for all U.S. stocks. It looks at the weighted average strike of all the call options and weighted average strike of all the put options. And so, where are my calls? Where are my puts? And it gives you a sense of whether primarily the bets are on calls or on puts and where they are. It's kind of like the betting websites that bet on elections. It's just another sentiment, but I like it. And so I'm going to be following Axe Cooper. I actually gave him a little award and read it, and I think maybe you should too. Thought it was awesome what he was doing there. So a few more things I wanted to share, and then we're going to wrap this up. Guy Cohen, The Bible of Option Strategies. I'm reading this book right now. It's online. It's free. It's awesome. There are a lot of option strategies. The way that we buy options is so immature. Oh my God, I'm like 4 years old the way I'm buying options. What I should be doing is I should be buying something and then hedging. Or selling something and then hedging. Or buying volatility or selling volatility. What am I doing just going naked long calls? Naked long stock, long calls. Again, 4 years old. Now, if you're right, you make a ton of money, especially in an upward market. But, wow, is that ugly. So we're learning more about these other strategies, and over time we'll be talking and we'll be exercising some of these more, advanced option strategies. I also wanted to share MedAd News. There's an article on Beyond Medical Marijuana and all the different companies that are in this. Let's look at the reading view. Medical marijuana is a pretty good topic to talk about, right? Because it's kind of interesting and new. And so there's the biologicals who are using THC and CBD out of marijuana, and they're figuring out ways to take care of things. So GW Pharmaceuticals, which was bought by Jazz Pharmaceuticals, booyah, a lot of money made there. They're preventing epileptic attacks. Okay, that's awesome. And so it works. The other one is anorexia. Marijuana gives you the munchies. There's a drug, Marinol, and it gives you the munchies, right? So if you're anorexic, you take the drug, You got the munchies. You fatten up. It's great. But that's not really where Corbis is at. So Corbis is doing something a little bit different. They're focusing on the endocannabinoid system, which is a different system. It's not your central nervous system. It's not your brain and your stem cell, and your nervous system. It's not your immune system. It's your endocannabinoid system. It's a third system, and there's very few drugs that treat it. What's cool is that marijuana tickles that system and makes things happen. It gives you the munchies. It can calm you down. It can reduce inflammation. This is all good stuff. I take a lot of ibuprofen because I'm weightlifting these days. I'm losing a lot of weight. I'm weightlifting. It's great, right? But it hurts. You get swelled up and things hurt. And there's big bad illnesses. DM is one of them, where you get chronic inflammation and it makes your muscles atrophy and it gives you these blotches on your skin, these rashes that are debilitating. So what Corbis is doing is figuring out how to kind of tickle or treat that endocannabinoid system. So if there's receptors like CB1 or CB2, they'll create a molecule that perfectly attaches to it and may block it. So, reduce inflammation. Reduce hunger. Reduce anxiety. Have you not go into shock. And potentially reduce cancer. Because your body, with its immune response, the cancer, right? And so we could slow that down. We could stop having our body attack healthy cells. And so Dr. Yuval Cohen is leading this company. I don't know the guy. But what I can say is this. There's a lot of people out there that say stupid stuff. Like, you should give your cat CBD oil. This is from a veterinarian. Just looked at her like she's an idiot, right? The truth is, we know how the endocannabinoid system works, and we're creating these molecules that, if they work, so potentially for obesity, it's a $3 billion a year market, I believe US alone, to treat obesity. That's awesome. All these guys got to do is get one of them right. And so I love this article. So if you have a chance, take a look. MedAd News, August articles, page 10. This is due diligence, guys. Do it. Learn. Learn and grow, right? Because no one else. It's your money. Okay. This is FinViz. By the way, I love FinViz. Thank you for all the data. Thank you for everything you do. I just want to show you what's up and what's down today. What's down today is the VIX and gasoline and lumber and cocoa, okay, and soybean meal. But the VIX. So the VIX is the volatility index on the stock market in the United States. I find it fascinating that one good day, Thursday, I swear to God, I wanted to sell everything and hide in a hole. Friday, we have a good day in the market. The VIX is down 6%. I'm blown away by this, by the way. Blown away by this. The S&P is up less than 1%. The Nikkei is up 0.6%. And yet, the Russell's up 2.81%. So the Russell's having a great day, right? The Russell's the small caps. But I don't know. I feel like there's like a knee-jerk reaction in the market. Market goes up, buy. Market goes down, sell. And I don't know. I think we're in an interesting time right now where markets are tending to drive up dramatically. Like the Russell, the NASDAQ 100's up 1%. The S&P 500's up almost 1% right now. Crude oil almost up 2%. So this is because people are building a point of view on our Main Street economy. Well, you know what? COVID must be behind us. I read a report in the last 15 minutes. And interest rates are coming down, and it's going to be great. So let's drive the VIX down, and let's all, go out and party. But you can see the VIX has been on it. This is, by the way, this is the VIX over a year, a little more than a year. And you see how it's been riding like 32 to 21 to 36 to 24. It's been kind of in that 20s to 30s range. And then since April, it's been under 20 for the most part. Not always. 16, 21, 17, 22, 16, 22. So we're at about that 20 range. And so markets are getting more confident, possibly because we're entering into the fall. Your traders, your investors are coming back from vacation. August is over. September's coming. Big money's back at the table. I got to tell you, I'm counting on that as well. Big money is back at the table. So what that means is that your fear that the market is just going to crash, right, is systematically declining. And with any good news in the market, you're seeing that VIX go under 20. I think it's interesting. I don't know if I like this, though, but I think it's interesting. I think you should think about it, right? Because here's a market that says, knee-jerk, I think there's no reason to worry. There's no reason to worry. There's no reason to worry. So let's take a look at the stocks that went up today. So I love it because I don't trade off of this, but I do look at it every single day. So there are 133 stocks that are up more than 8% today. And there's some memes out there, like support.com. I actually think of them as Spirit, SPRT. It's up like 170% today. So, if you got in, you made a lot of money, right? Now make sure you get out, because that's not up and down because it's, good. So like Marin Software is one of those meme stocks. It's up 30% today. So there's money pumping into stocks that have been memed before. Doing great. I mean, if you're in that little playground where you know how to find those stocks, I think you're loving life. Now we look at the stocks that have gone down. Let's take a look-see there. So remember, it was 133 went up, more than 8%. 15 are down. So that's 15 to 1, 18 to 1, and Sava's one of them. I'm so sorry, guys. But biotech is always good. VMware, I noticed this morning, it must have had bad earnings. I don't really care about VMware, so I'm not there. And a lot of these look like they're Chinese companies or So Young International, Weibo Corporation. I just don't know them. But 8 down, 133 up. It's an interesting market today, right? It's a lopsided market. All right. So we've told you a lot today. Covered a lot of ground. Okay? We're making progress on our client work. We could use some more clients, by the way. If you're looking for consulting on quantum, consulting on the markets, investment advisory work, give us a call. We will work very hard for you in a very competent manner. I promise. We're studying for the Series 65, and we're going through the process of having our firm become an investment advisory firm, and myself being a registered investment advisor. We're going to become a lot more serious after that, but that's okay. We're going to have to put our research behind a firewall and charge for it, so that it's not willy-nilly recommendations. We're running our analysis, Chicago Quantum Net Score. There's always more to do, but we still learn. We learn a ton. Social media presence. We're having fun with it. We let me see if I can find it. We did a drum solo here. I'll just put that on. Hopefully you don't get epilepsy. I love it. The markets are still in the summer doldrums, but very hot today. Very hot market today. And so this is our spirit drummer for Akebia and for the whole market today. So I want to say good luck in the markets. If you want to learn more about our firm, please go to chicagoquantum.com. We are management consultants. We focus on quantum computing. We focus on the stock market, and we focus on media and entertainment. And there's a lot of good stuff out there. I just put this up to show you the things that we have. You can buy an analysis from us, which is how we get paid, or buy project work, buy hours, basically. And if you want to learn more, just call us with the contact and we'll negotiate. We'll figure it out for you. But most people don't want to buy a single analysis. They want to understand it and then they want to buy it every week. I think that makes the most sense. If you want to read our research, great. Market questions and data is free information for you. Negative beta stocks. We publish them and we publish why we publish them. These are stocks that move in the opposite direction of the stock market. Stock splits. Some people like to invest in stock splits. Some people who are data analysts need our validated tickers. There's stocks that are paying 10% or more yield over the past year. That's awesome. Can you imagine earning 10% on your money every year? And the stock goes up sometimes. By the way, in all these cases, you can lose all your money. Stock market is very dangerous. Nothing's guaranteed. Use cases on quantum. The platforms that people use on quantum. Corporate Finance 101. We got all this stuff. We have our recent CQ&S analysis findings. We actually published the findings of one of our runs for free, and then we made a video. So if you don't like to read, you can watch the video. We're just out there. So check out the website. Personally, I like it. It's going to be sad to have to take things down, but we're working towards our investment advisor registration for Illinois. And we are founding members of the Quantum Economic Development Consortium. We do have a Better Business Bureau A+ rating. We're out there. We're here to help. So give us a call. Please let us know you like what we're doing. And if you'd like to buy a run, buy an analysis, get involved. We're so close to needing to open up an office and hire people. So if you're interested in working with us and you live near Highland Park, Illinois, give me a shout. Okay, take care now. Hopefully you enjoyed the video. Oh. I have a question. Yay. Hi, Jeffrey. What's a good book or study guide for the Series 7 and Series 65? I am using one of the large guides. I'm going to grab it for you. Be right back. The Securities Institute of America, Inc. It's a good book. It's got lots of content. We've read it twice. Actually, we're finishing it twice. Took the practice questions. So I'm going to type that in the thing for you here. The Securities Institute of America, Inc. And then we have another test guide that we got from our public library. This is by Coventry House Publishing. Coventry House Publishing. Now, we're kind of frugal. Actually, we're very frugal. So what we do, we go to A Libris, Olibris. We sign in. We buy the books. So we bought the study guide. How much should we pay? $72.43. For $72.43, we got the study guide. That's awesome. Yeah. Nice. Hi there. We have Sandy Cabrera on online. I plan to start studying it. Thanks. You're very welcome. Yeah. It's good. We also took a Series 7 test and like a practice test that we also got from our public library. And that helped us understand that we had some areas to learn. Oh, I know we are both on SMLP because it is cheap. So I sold my SMLP. Oh, QRT. Yep, I will check that one. I sold my SMLP. Needed the money at that time. Made a fortune. So let's take a look at it. Let's QRTEA. Let's take a look at the chart. By the way, this one has shown up in our runs. This is a very familiar ticker for me. And first thing I'll do is look at it over the year. So looks like it gapped down, and then it filled the gap. It's interesting. There's a lot of people who believe that gaps are meant to be filled. And always interesting. You really should have. But I believe the stock will hit $100. Assuming they get good financing. To roll over their $1.1 billion May 22s. Yeah. So this one's interesting. This one's been pretty flat. Yeah, I'm waiting for the refinance. We all are. SMLP is a great company. You know, the other thing about it is they are making progress on EE. That is going to boost EBITDA. Yeah. Oh yeah, QRTEA. All right, so a lot of debt. Internet retail. You know what? I'll take a look. I'll All right. So we'll take a look. Let's see if they're earning money. So what the question was, or the point was, is they've got a lot of debt. They're going to buy back a lot of shares. Free cash flow seems like it's going to be $1 billion, according to Sandy Cabrera. So I made a commitment to taking a look. And total revenue, quarterly revenue, solid, $3.5 billion. This is not a small company. They've got positive EBIT. Let's take a look at the cash. You know me, I love cash. Cash is king. Operating cash flow over the quarters, declining but still positive, which is helpful. They do make investments in their business. It actually looks like they're paying back some of their debt. Their financing cash flow is negative, so they're paying off some of their debt with their operating cash flow. They got plenty of cash on hand. And some nice repayment of debt. Yeah, this one could be interesting. We'll take a look. We'll definitely do some due diligence. So, all right. Anything else out there? Their non-current liabilities looks like their bought-in debt is about $5 billion. Okay. John Malone. Huh? With a question mark. Is that about QRTEA? Oh, okay. He's involved. He's famous for paying interest and not taxes. It's interesting. All right. Again, it's worth a look. So, got it. I'm going to add it to my watch list. I'll add it to my current holdings. Maybe I'll buy a share just so I see how it goes up and down. And, oh, he owns most of it. All right. All right. Well, thank you very much. Sandy, you can give me a call. If you want to chat directly, 847-780-4401. That's my office number. Click to send an email. Just give me a shout. We could say hi. I want to thank you for joining the call. Really appreciate it. And I'm going to end the stream now. You guys all take care. Thank you. Bye-bye.